You want to get smart on what's happening inside one of the world's biggest financial plumbing systems? Well, you've definitely come to the right place. Welcome to TalkTickers. Today, we are doing a deep dive into the recent earnings call from Visa. We're looking at their fiscal second quarter of 2025.
That's right. And looking at Visa, it's not just about payments. It's like taking a pulse check on global commerce, on consumer behavior.
Exactly.
So we're going to dig into what they reported, try to understand the key drivers behind those numbers, and really hear what management is seeing right now, what they're planning for the future. And this is all based strictly on what they shared during that call.
Okay, let's jump straight into the headline numbers for the quarter then, because they were pretty robust. Visa pulled in $9.6 billion in net revenue. That's up 9% year over year. And actually, if you strip out the currency fluctuations, it was even stronger, up 11% constant dollar.
And that flowed right down to the bottom line, didn't it? Earnings per share came in at $2.76. That's a 10% increase year over year, or again, 11% if you look at it on that constant dollar basis. So yeah, solid performance all around.
Definitely solid. Now, how did they get there? I mean, the engine of Visa is really transaction volume, right?
Totally.
Global payments volume grew 8%, which is impressive scale. Looking regionally, U.S. payments volume was up a healthy 6%.
Okay.
But international payments volume saw a stronger increase, rising 9%.
Right. And then the real standout, the one that often gets people talking, that's the cross-border volume. If you exclude the transactions happening within Europe, that number jumped 13% year over year in constant dollars. Huge.
13% is big.
Yeah. And overall processed transactions, just the sheer number of taps and clicks across the network, that was up 9%. And importantly, these results held up even when they were, lapping the impact of leap day from the previous year.
Ah, good point. That can skew things a bit.
It can. So the underlying growth seems pretty strong.
Interesting. So strong top line, strong bottom line, healthy volume growth across the board, especially that cross-border piece. What about the things that impact profitability? Did management mention anything there? Factors that help them maybe beat expectations this quarter?
Yeah, they called out two key things, actually. Client incentives, that's basically the money they pay back to their bank partners, right?
Right.
That grew 15%, which it sounds like a lot, but it was actually less than they had anticipated.
Oh, okay.
And then operating expenses, those grew only 7%, which was also lower than they'd modeled. So both of those things kind of helped boost the operating performance for the quarter, gave them a bit of upside.
Okay, makes sense. So let's unpack this a little. Beyond those impressive headline numbers, where exactly is this growth coming from? Management really broke it down into like three core engines, didn't they?
They did, yeah. They pointed to consumer payments, which is the big one everyone knows, then commercial and money movement solutions, and finally their value-added services. Think of those as the main growth buckets for them right now.
All right, starting with consumer payments then, what was the big story there?
Well, the recurring theme, and it's pretty notable given some of the headlines you see out there, was just how resilient consumer spending has been. Management said, repeatedly, they saw no signs of weakening in the U.S., even looking into late April.
Really? No weakening?
That's what they said. And it wasn't just isolated to one group either. They said all spending levels remained resilient, although they did note that the affluence segment, the higher spenders, they continued to grow the fastest.
Okay. So people are still swiping, tapping, clicking away. How is Visa enabling even more of that activity? What are they doing on that front?
Well, a big part of it is just getting more cards out there and critically more places to use them. So total credentials, think of that as the number of Visa accounts globally that grew 7%.
Okay.
And they made significant progress displacing cash. This is key. They highlighted adding over 1 million new merchant locations just to markets like India, Mexico, and Brazil in the last year. Places where cash is still really common.
Wow, 1 million new locations in those markets? That's huge.
Yeah.
Getting physical cash off the table and onto cards has got to be a major focus. Did they give any specific examples of how they're doing that?
They did, yeah. One interesting one was in Colombia with a company called Efecti. They're apparently a large cash network there.
Okay.
Visa partnered with them to launch 4.5 million consumer debit cards and integrate acceptance directly with Efecti's cash agent network. It's a pretty clever way to kind of bridge that gap between cash and digital.
Yeah, that sounds smart, meeting people where they are.
Exactly. And they also talked about open loop transit deals in Latin America, like in Argentina with Banco de la Nación and Chile with Metropago. basically helping people use their standard Visa cards on public transport instead of needing a separate dedicated transit card.
Just making payments easier, more accessible, that seems to be the name of the game. What about product innovation? Anything new and exciting on the consumer side they talked about?
Oh, yeah, absolutely. Their whole tap to everything strategy seems to be really gaining traction.
Tap to everything.
Yeah, so tap to phone, which lets a merchant use a standard smartphone as a payment terminal, that added nearly 2 million transacting devices globally just since last quarter.
Wow.
With really strong growth in places like Latin America, the US, and Europe.
2 million new terminals, essentially created out of thin air from existing phones. That's incredible.
It really is. And just broader tap-to-pay penetration, just tapping your card or your phone at a regular terminal that reached 76% globally.
76%.
Yeah. And a significant milestone here is that the US finally exceeded 60% penetration for the first time. They mentioned seeing it pop up more in places like drugstores, retailers, quick service restaurants.
Finally catching up.
Right. They also mentioned something called tap to add card, which sounds interesting. It apparently helps reduce fraud when you're adding a card to a digital wallet because you just tap the physical card to the phone.
Oh, neat. Okay, but this next one sounds really fascinating. Tap to P2P. You mean peer-to-peer payments just by tapping phones together?
Yeah, exactly. This is a new one they discussed.
Yep.
It leverages their existing tech, like tokenization and Visa Direct, their push payments platform.
Okay.
It basically enables contactless person-person money transfers just by tapping one phone to another or maybe a phone to a card. They announced an upcoming launch with Samsung in the US using the Samsung wallet. It's a pretty cool example of how they're trying to make moving money just, totally seamless.
That could be big. And shifting gears just a little bit, they've been talking about stablecoins and blockchain tech for a while now. Any updates there? Do they give specifics?
They did. They emphasized their focus is really on interoperability and programmability in that space.
Yeah.
The big headline number they threw out was surpassing $200 million in cumulative stablecoin settlement volume.
200 million. Okay.
Yeah. And apparently they're now using stablecoins for settlement 7 days a week.
Yeah.
So it's becoming a more practical day-to-day application that's gaining some steam.
Right. Not just experimental anymore.
Seems like it. They also highlighted a pilot they're doing on the Ethereum blockchain with BBVA, exploring how banks could maybe issue and use stablecoins for more programmable finance applications. They definitely acknowledged it's still early days in the grand scheme of their massive business.
Sure.
But they seem to see real potential there. Especially if, and this is a big if, the regulations around it become clearer.
Makes sense. It sounds like they're definitely exploring the future while still doubling down on their core strengths. And you mentioned earlier the affluent consumer was growing fastest. How are they specifically targeting that group?
Right. Well, they continue to evolve their premium products, like the Visa Infinite Card platform. They specifically called out a recent launch of the Scotiabank Passport Visa Infinite Privilege Card up in Canada.
Okay.
This card is loaded with elite travel benefits, so it's clearly designed to attract those high-spending, often cross-border travelers.
Gotcha. Okay, so that's consumer payments covered. What about the second growth engine they mentioned, commercial and money movement solutions? How's that area looking?
That area also showed some really strong results. Commercial volume, so business spending, was up 6% in constant dollars.
Okay.
And the revenue they get from those commercial solutions saw even more robust growth. That went up 13% in constant dollars.
13% revenue growth there. That's pretty good. What's driving that strong growth in commercial?
A major engine here, again, is Visa Direct. Remember, that's their platform for pushing payments out, not just for traditional purchases.
Right, the push payments.
Exactly. Transactions on Visa Direct grew significantly, up 28% year over year. They hit 3 billion transactions in the quarter.
3 billion. Wow.
That's huge. Now, management did note this was a bit of a moderation from the growth rate in the previous quarter. That was partly due to lapping the initial big ramp up of peer-to-peer payments in Latin America and also that leap year effect we talked about earlier.
Okay, so Visa Direct is still growing incredibly fast, just maybe slightly slower than the absolutely explosive rate it was at before.
That's a good way to put it. And the strategic focus in commercial, they said they're deepening relationships with clients and really focusing on capturing that massive opportunity in accounts receivable and accounts payable, how businesses pay other businesses.
The B2B payment space.
Right. And they're doing this using embedded finance solutions. An example they gave was a deal with Lloyd's Bank and a company called Talia. They're integrating Visa virtual cards directly into their customers' existing SAP ERP systems.
Ah, embedding it right into the core business software. That sounds like a smart, sticky kind of move.
It does, doesn't it?
Yeah.
Makes paying suppliers way easier, more automated. They're also supporting vertical-specific solutions. They mentioned a company called Ito in Latin America that uses Visa's platform for, like, card-as-a-service solutions across different industries. And in B2B travel, they expanded an agreement with Van Leon Global in Hong Kong, leveraging Visa Direct's multi-currency capabilities for things like, paying hotels overseas or receiving commissions in different currencies.
So more examples of Visa Direct just showing up everywhere.
Exactly. They rattled off a few more deals, too. One with Jack Henry, who's a major tech provider to banks and credit unions.
Oh, yeah, know them.
They'll be offering Visa Direct through their digital apps to financial institutions, consumers, small businesses. Then Checkout.com is launching push-to-card capabilities in the UAE using Visa Direct. And they're expanding their work with Kababay in the U.S. to enable push-to-account and wallet transfers on top of the push-to-card they already did.
They really hammered that point home, didn't they?
They did. They basically said Visa Direct is the largest money movement platform globally, period. By transactions, by volume, by endpoints reached.
Wow, okay. That 3 billion transaction number really puts the scale into perspective. All right, on to the third growth engine, value-added services, or VAS. This sounds like where they offer more than just the pipes, the transaction network itself.
Precisely. And this was a huge growth area this quarter. Revenue from VAS accelerated significantly. It jumped 22% in constant dollars.
22%.
Yep. Hit $2.66 billion. And they said they saw strength across basically all their portfolios within this VAS segment.
22% growth is really impressive. What kind of services are we actually talking about here? What's in that bucket?
It's pretty broad, actually. It includes things like issuing solutions helping banks issue cards, acceptance solutions helping merchants accept payments, risk and identity services, even consulting and advisory stuff.
Okay.
So in issuing, for example, they highlight their work with Pismo. That's the cloud-native issuing platform they acquired not too long ago.
Right. I remember that acquisition.
They said they have a strong pipeline there, and Pismo is entering 5 new countries this year. They mentioned names like Neki in Colombia, Banggodin in Argentina, even uses Thailand and India. They're also growing their card benefits business, helping banks like Raiffeisen Bank in Austria offer things like airport lounge access through Priority Pass, facilitated by Visa.
Making it easier for banks to launch cards and add those cool benefits people like. What about on the merchant side, the acceptance solutions?
On the acceptance side, they announced 2 pretty significant new offerings. First, they're launching a completely revamped version of Authorize.Net in the U.S. next quarter.
Authorize.Net, yeah, that's their gateway mainly for smaller businesses, right?
Exactly. This new version apparently features a much better interface. It incorporates AI capabilities. They even mentioned something called an AI agent.
An AI agent for payment processing. Interesting.
Yeah. Plus, improved dashboards, support for in-person readers now, and yes, tap-to-phone support built in. It's really designed to help those small businesses understand their data better and manage their whole checkout experience more easily.
Sounds like a big upgrade. What was the second offering?
The second one is called Unified Checkout. This is available now in the U.S., and they're piloting it elsewhere, planning a Q4 rollout. The idea here is that a merchant integrates once.
Just one.
Just once. And they get access to over 25 different payment options. Think buy now, pay later, alternative payment methods, all that stuff.
Right.
And critically, it bundles in Visa's fraud management tools, 3D secure authentication, tokenization capabilities, all in one package. They mentioned Decathlon, the big sporting goods retailer, is now using their gateway and their decision manager risk tools for their e-commerce business.
Consolidating that whole complex checkout process for merchants sounds like a massive value add. You also mentioned risk identity services in that VAS bucket.
Yes, definitely. They talked about the integration of FeatureSpace, that AI fraud prevention company they acquired.
Right.
They've signed over 20 clients globally just since that acquisition closed. They highlighted their ERIC Risk Hub, that stands for Estimation of Real-Time Interchange Compromise Risk Hub, quite a mouthful.
Yeah.
But it uses machine learning and AI for real-time fraud detection. It helps build better risk profiles for transactions, and ultimately the goal is to improve approval rates for legitimate transactions while stopping the bad ones.
So using AI not just to stop fraud, but actually to approve good transactions faster and more accurately.
Exactly. That's a key benefit. And then finally, within VAS, their advisory and other services business. This is powered a lot by Tink. their open banking platform.
Tink, right. Primarily Europe.
Primarily Europe,
Yeah.
but expanding. Tink enables things like payment initiation, so pay by bank and account information services. They gave an example of Tink and a partner working with Recharge and Vodafone in Germany for pay by bank services. And Tink has apparently reached a milestone now of connecting over 10,000 merchants through more than 10 European payment service provider partners.
Wow, that open banking piece seems to be scaling too. It really sounds like Visa is building out this whole stack way beyond just basic card processing. Did they kind of tie this all together at all?
Briefly, yeah. They mentioned the evolution of what they call their Visa as a service stack.
Visa as a service.
Yeah. The idea is taking their underlying foundation, their core network and tech, and building a services architecture on top. This lets them offer more componentized capabilities like bits and pieces of their technology more easily to clients and partners. They kind of tease that they plan to share more details at an upcoming event they call a product drop.
Okay, interesting. Now, here's where it gets really interesting for me. After all those product launches, all those growth engines, what is management actually seeing in the economy right now? And what do they expect looking forward?
Right. Well, they really doubled down on that core theme of resilient consumer spending, specifically noting, again, no signs of weakness through late April in the U.S. That seems to be the absolute key takeaway on the current environment from their perspective.
And did they break down that spending at all by category? Any nuances there?
They did note there's some variation, like travel and entertainment growth has decelerated a bit, but that's coming off previously very high rates.
Right.
But overall spending strength across both discretionary stuff and non-discretionary essentials, that remains stable. And they said they're seeing similar stable trends outside the U.S. as well.
Okay. What about that strong cross-border volume we talked about? Any more color on the trends there?
Yeah. Cross-border volume trends were generally in line with where they were in late fiscal 24. And importantly, they stressed they remain above pre-COVID levels overall.
Above pre-COVID, still.
Still.
Yeah.
Now, they did mention a few factors influencing the quarter specifically, things like currency weakness in certain areas hurting the reported numbers a bit, and also some timing shifts around holidays like Ramadan and Easter impacting year-over-year comparisons.
Okay.
They also specifically mentioned a slowdown in the Canada to U.S. travel corridor. But they were quick to stress that the impact of any single quarter like that is pretty limited because their overall cross-border business is just so geographically diversified now.
Right, makes sense. So resilient consumer, cross-border still strong overall despite maybe some small pockets of softness here and there. What are the expectations then for the next quarter, Q3? What did they guide to?
Okay, so for the third quarter, their assumptions are cross-border volume will stay roughly in line with the average they saw in March and April for the rest of the year. This kind of factors in the normalization of those holiday timing shifts we mentioned.
Okay.
But it puts the growth rate slightly below the pace they saw back in Q4 of last fiscal year. They also assume that the FX volatility they saw in April, which was high, will moderate a bit from May onwards.
Got it. And what about those incentives and expenses we discussed earlier? How are those expected to trend?
Right. They expect incentives to have higher year-over-year growth in the second half of the year compared to the first half.
Higher. Why?
With sequential step-ups expected in both Q3 and Q4. They said this is driven by client performance adjustments, basically truing up payments based on volume, and also they're anticipating some early contract renewals kicking in. On the expense side, they expect growth in the low double digits for Q3, which is pretty consistent with the revenue growth they're projecting.
All right, so putting all of that together, what's the actual financial outlook for Q3, the bottom line?
On an adjusted basis, the expectation is net revenue growth in the low double digits, similar to Q2. Operating expense growth also low double digits. They anticipate non-operating income of around $150 million, apparently. They got a benefit from some tax matter resolution there.
Okay.
The projected tax rate is between 17% and 17.5%. And based on all that, they expect adjusted EPS growth for Q3 in the high teens.
High teens EPS growth, that's quite strong. Does this outlook change their view for the full year at all?
Nope. They specifically said the full year guidance remains unchanged. And management kind of emphasized, look, we aren't economic forecasters. That's not our job.
Right.
Their approach is just to manage through different cycles, relying on what they see as a very resilient and diverse business model.
Okay. So stepping back from the numbers then, what does this all mean? Looking at management's overall perspective, what were some of the key takeaways on how they're sort of navigating this current kind of uncertain environment?
Yeah, a few things came through pretty clearly. One was their focus on client engagement right now. It sounds like instead of maybe chasing massive transformative deals, they're spending a lot of time just helping their existing clients navigate the current environment. Using the data, the products, the advisory services they already offer.
So more about helping clients make the most of what they have rather than just signing big new logos right now.
That's the sense I got, yeah. And going back to cross-border, they really reinforced how beneficial their diversification is. Not just geographically, but also in terms of the type of spending, like e-commerce versus travel. That diversity really helps them absorb softness if it pops up in any specific area or corridor.
So like that slowdown in Canada to U.S. travel doesn't sink the whole ship because they've got strong growth somewhere else or in e-commerce maybe.
Precisely. And despite acknowledging the overall economic uncertainty out there, management stated pretty clearly they remain committed to their product roadmap and their investment strategy across those three big growth levers we discussed: consumer, commercial, and VAS.
They're staying the course.
They seem confident in the long-term opportunities. However, they were also quick to add that, look, they are ready to adjust their investment profile if the underlying facts change materially. They're not going to just keep spending blindly if things really turn south.
Okay, ready to pump the brakes if needed, but it sounds like it's full steam ahead for now. Did they comment on M&A at all? Mergers and acquisitions?
They did, briefly. They suggested that from their position of financial strength, the current economic backdrop might actually create more attractive M&A opportunities globally than maybe were available when valuations were higher. So they seem optimistic on that front.
Interesting. And finally, let's say things do turn down significantly. How prepared do they feel for a potential downturn?
Management definitely feels the business is more resilient now than it might have been in previous downturns.
Why is that?
They cited that increased diversification, we talked about more everyday spending, more debit transactions, a bigger mix of e-commerce. These tend to be less cyclical than, say, high-end travel. They also highlighted the levers they have, like their variable incentives. If volume slows down, those incentive payments automatically decrease, which naturally helps offset some of the impact on profitability.
Ah, a built-in shock absorber.
Kind of, yeah. And they said they have flexibility on expenses while still trying to balance the need for continued long-term investment. They basically stated they are prepared to act decisively if required.
It definitely sounds like they feel they have more tools in the toolbox this time around, maybe. What about that perennial challenge, though? Government nationalism, countries wanting their own domestic payment systems, potentially locking Visa out.
Yeah, that's always a complicated, long-standing challenge for them, right? They said they manage it by engaging globally with governments, with regulators. They use tailored strategies that they say have worked in similar, highly regulated markets in the past. And a big part of it is educating governments on the complexities and, frankly, the benefits of participating in a global payments market. They highlighted their, proven track record of success navigating these difficult environments over many years.
Okay, so summing up the key takeaways from the call then. Visa delivered strong results again this quarter, really riding on the back of surprisingly resilient consumer spending. They're seeing solid performance across all their core growth engines: consumer payments, commercial, and especially those value-added services driven by continued innovation and just expanding their reach globally.
Right.
And it sounds like they're navigating this current uncertain environment from a position of strength, really leveraging their diverse business model and maintaining readiness to adapt their investments if conditions change dramatically.
Exactly. And, this leads us to a final thought for you, the listener, to maybe consider. Given these significant investments they're clearly making in newer areas, things like stablecoins, integrating AI into products like that, revamped Authorize.Net, building out that whole Visa as a service stack. How much do you think Visa's future growth will depend on these emerging capabilities really taking off versus just the continued fundamental strength and expansion of their core transaction processing business? Something to chew on.
Definitely something to think about. Now, before we go any further, it is absolutely time for our critical disclaimer. Please remember, this is not financial advice.
Not at all.
This deep dive is purely for informational purposes, based only on the earnings call we've discussed today. Investing involves significant risk, and you should always do your own research and consult with a professional.
Absolutely. That being said, sometimes it's fun to connect the dots in, let's say, a more speculative way.
All right, okay, one last thing for you to chew on then. Our outrageous but plausible thought experiment for the day. Based on that consistent messaging of resilient consumer spending, especially noted in the affluent segment, which they said is growing fastest. The overall strength in cross-border travel still remaining above pre-COVID levels, and that specific mention of the new Scotiabank Passport Visa Infinite Privilege Card explicitly targeting affluent Canadians with elite travel benefits. Get this.
Okay.
Here's the thought. Could you consider a short-term, maybe directional bet on increased spending by affluent Canadian travelers heading into the U.S. in the coming months, despite the recent Canada-U.S. corridor slowdown mentioned in the call?
Okay, let's break that down. The plausible part. Affluent consumers are Visa's most resilient and fastest-growing demographic, according to the call. Cross-border travel is, overall, still strong compared to historical levels, even with some corridor shifts. And launching a premium travel card right now for affluent Canadians does suggest some market confidence in that specific segment, right? It could even act as a catalyst for increased cross-border spend into the U.S. from that group.
Right. But now the outrageous part. This flies directly against the specific comment they made in the call about the Canada to U.S. corridor seeing a recent slowdown.
Exactly.
It relies on a very narrow, specific segment, affluent Canadian travelers, maybe using this one new card, somehow reversing a trend mentioned in the broader data. It completely ignores larger factors like foreign exchange rates or maybe other reasons for travel shifts away from the U.S. It's definitely a highly speculative, super niche bet on a micro trend overcoming some noted macro softness based largely on a single product launch and a demographic generalization.
So again, purely for illustrative purposes, just connecting some disparate dots from the call in a hypothetical way. Please, do your own due diligence. Don't trade based on this.
Absolutely. So there you have it, folks, our deep dive into Visa's Q2 2025 earnings call. Strong results, clear strategic focus areas, and a management team that sounds pretty prepared to navigate whatever the economic environment throws at them next.
And just remember, this analysis was strictly limited to the information shared during that single earnings call. There's always more context out there to explore if you're interested.
We definitely encourage you to take this information and dig deeper yourself. Thanks so much for joining us on TalkTickers.